I think with this I will open the floor for questions. We have time for questions, so okay.
Thank you. So I have a question.
Should we perhaps use the mic?
Yes.
So you can also ask, I mean, while standing here, you can relax and the floor is yours. You don't have to go and sit there.
I love stages, by the way. So I was saying I was going to ask you, Teddy, you told us about dual listing, and maybe since you're working at ESX, my question relates to the fact that I heard on the news that Dangote refinery may be maybe listing in the Ethiopian Securities Exchange, and I just want to understand like how would that actually look like, and maybe forgive my ignorance also. Maybe I have a question relating to, for example, if I buy, for example, one Dangote share or maybe 10, I don't know, can I actually sell them? Because maybe I have an actual concern about the liquidity of the Ethiopian Securities Exchange. You know, I have to be honest. But maybe can I sell it maybe in Nigeria? Is that a possibility in dual listing, or is it just the cross-listing aspect that we're promoting in the country? And also, additionally, maybe if you have researched on this, I want you to tell me which laws would govern my, for example, I may sell the shares that I have, so there are applicable capital gains taxes. So, am I going to be taxed using the home jurisdiction, for example, if I sell in Kenya, or is it my residence? How do you resolve those issues? Maybe this is my question.
Thank you very much. Other questions? Okay.
I have one question for Dr. Stola. So one of your suggestions is that you recommended a directive. So my question is, can a subsidiary law, such as a directive, made a gap that's created by the main law, which is the Capital Market Proclamation, specifically given the fact that the arbitration proclamation is a proclamation and what we're suggesting is a directive?
Thank you. Others on this side? So, okay, should we give to the presenters the opportunity to address the questions?
Thank you, Volga. Thank you, Volga, for asking the questions. So, in case of dual listing, as you mentioned, when I was conducting this research, it looks like an overambition or an imaginary, which is not on the ground. But however, and as you said recently, there are interests from other African markets to list their securities in the Ethiopian Securities Exchange. That will bring the efficiency, or that will enhance the efficiency of liquidity in our market, as you stated. So I think not in detail, and as I said, not as let's keep the disclaimer, not on the official status of ASX, but from my thinking that Dangote wants to raise funds from Ethiopia. So if that's the case, the investors will become the local investors.
Can I say my shares?
Well, if that company is listed there, you can sell. However, it depends on the arrangement made between the Ethiopian Securities Exchange and the NGX. It depends on their mutual agreement. So that's why further agreement has to be done, and they have to do so. I think that is how the market will be integrated, and also if it is dual listing, the securities will be on our CSD, and if there are agreements, we call the CSCS, the central in Nigeria we call the Central Securities Depository CSCS, and if they deposit the securities there, the Ethiopian broker can approach the Nigerian broker to sell, and your securities will be sold there. So that will depend on the arrangement, and from now there is no certain answer on that case. So in case of applicability of the law, if securities are listed on our market, the applicable law is the domestic law. The domestic law will be applicable because our market, both the authority and the exchange has conducted a due diligence in the process of registering and listing that market, securities. In that case, the local law is applicable. However, in the case of the regional integrations, like the African exchange linkage project, there is the dispute settlement mechanisms. They have, dispute is arised in such cases, and it was so challenging to settle the disputes that are arised in different jurisdictions. So previously, there was the experience that when exchange allows dual listing, they agree that how they settle if there are certain disputes, and they agree which will be the jurisdiction, which law will be applicable, and extra. But the linkage, the regional integration project, in that linkage, they have dispute settlement mechanisms. And if we go further to be the member, to have a full membership in that linkage project, then at least we can have a central applicable dispute settlement mechanisms. And currently, the applicable law is the domestic laws.
Thank you.
Thank you, Samir. For asking this question. Yes, the problems that we raised are very much fundamental. And these gaps, problems and uncertainties cannot be fully and adequately resolved by directives. That is why, first and foremost, we say that the proclamation, the capital market proclamation, should be amended. For instance, the capital market proclamation does not say anything about, for instance, setting aside of an arbitral award. That's a very, just big problem. Therefore, since the proclamation does not have anything to offer, this void cannot be filled by directives. The framework, the most important primary legislation, does not say anything. But in the meantime, in areas, for instance, the framework is put under the proclamation, problems may be resolved by directives. For instance, the proclamation says that arbitration is compulsory, and it provides the Ethiopian capital markets, authority can issue directives, regarding the appointment, the costs, and the like of arbitrators. But still, the Ethiopian capital market, authority is just silent as far as the directive is concerned. It has not issued just a directive. But on select areas and issues, the directives would be just observed. But for fundamental problems in issues, the proclamation has to be amended. Either it has to make a clear cross reference to the complete law, that is Ethiopian Arbitration Reconciliation Proclamation, or if that is not just convenient, or if that is not accepted by the drafters of that proclamation, for just a reason which I don't understand, the proclamation has to contain just adequate rules regulating or addressing the most important problems that we just raised in this paper.
Okay. Thank you. I think all questions are answered. Let me use my authority to ask questions at least, in the absence of others. So I have a couple of questions for the three of you. For Yohalashit, your presentation, and I've also read your draft paper. So you're saying that the Capital Market Authority needs to balance investor protection on the one hand and market development. So, which means, I mean, the more you exercise your regulatory power to protect investors, then you create stringent standards for market participants. So that stifles development of the market. I think that's the way I understand. So, what's your view in the Capital Market Authority, tilting toward this one aspect of its objective, such as investor protection, excessively focused on investor protection, so that the market development aspect is somehow sidelined, or vice versa? What's your point on this, if I've understood your conclusion? Second, do I have time?
No, they have time.
Okay.
Go quick.
For Aschalo, you very well presented the dispute resolution mechanism within the capital market. But I didn't get your view on which disputes go to where. Do all disputes between all the ecosystem of participants go to arbitration, or are there some disputes cannot go to arbitration, and they have to go to the capital market tribunal, or can every dispute go to arbitration or mediation? For Tedros, I mean, this issue of cross-border trading or opening the capital market to cross-border trading is a very important question. My only concern is its timing. I mean, while the domestic market has not fully developed, is it even time to talk about accommodating foreign issuers, foreign investors, probably foreign service providers? To what extent are you advocating for opening of the market for cross-border trading? If cross-border trading, by that you mean both the listing, the trading, and the membership should be opened, if you are saying that. Is it the time now, or when will it fully, when could that be fully realized? Thank you.
Let's start with Russia.
Thank you. Very good question. Just to reflect my opinion on Mr. Salu's question, yes, proclamation, the ECMA directives, and generally the legal frameworks that regulates the capital market in Ethiopia provide us stringent requirements with regard to, that's very critical to investor protection. If you see the PO directive, there are stringent requirements with regard to disclosure, with regard to periodic current reports. The draft size directive also provides a very stringent requirement on the different market participants to protect investors, in fact, considering the different risk exposures. So more or less, in my opinion, the laws follows a flexible approach for less risky businesses and a stringent approach for more businesses that involve public interests. So from market development side, what I would say is that these legal frameworks also provide the authority the mandate to waive some requirements for developing the market. So you cannot regulate a market which is not developed. So at this stage, according to my opinion, we can assume that regulators may focus on the market development aspects, and in my opinion, the authority have, been doing different market development, capacity building programs, the legal frameworks, as I said, mandates authority to waive certain requirements. For example, if we see the service providers directive, there is one stringent requirement which requires a CISI level 3 certification for appointed representatives, so which is a very new professional qualification within the Ethiopian context. So as far as my knowledge is concerned, the authority has, somehow followed a flexible approach with regard to enforcing these stringent requirements. So the other thing is, as part of developing the market, in fact, regulators do not create products. It is the market participants that are expected to create products, but regulators do provide the framework, conducive framework for development of different products. In this regard, in my information, as per my information, the authority, has been working to provide the guidelines, the frameworks for development of different products, especially sustainable products, which you can see under the websites of the authority. So I cannot say which sides of the objectives that the authority has tilted, but I can, in my opinion, I would say, the authority should enforce the requirements because investors should have trust on the market. If investors do not have a trust, no one would be, free to invest or opt to invest in the Ethiopian market. At the same time, if the authority enforces these strict requirements against the different market participants, it may backfire and the market may not develop as expected. So the authority should take into different considerations. Some may not be disclosed to the public. Some may be considered within the authorities' purview. So generally, one point I would make, I want to make is that the transparency and the accountability aspects of this enforcing waiver provisions under the legal frameworks should be considered. Thank you. If this answers your question.
Thank you. It does.
So, Chalo apparently wants to have the last thing. Okay.
Thank you. Thank you very much for the questions. So in terms of timing, I totally agree what you say, because I know we have much more priorities, especially educating investors. Many of our investors the investors in Ethiopia do not know how to open the trading account. Even the shareholders of the company do not know how to participate and sell their shares in sufficient manner. Therefore, investor education should be the priority. And having more domestic listing, I know having more domestic listing of companies is also should be the priority, and strengthening the market participants, like strengthening the broker in terms of compliance, in terms of the system which is provided by the exchange, familiarizing them has to be the priority. I know that, but at the same time, there is also if foreign companies have an interest, and if it is one of a mechanism to solve the illiquidity issue, and if it can boost our trading activities, why not we consider listing foreign companies? Maybe even in terms of membership, admitting foreign investment banks or as a service provider, admitting foreign custodians, and also the foreign stock brokers. If we admit them, they will more work to develop the market, maybe in terms of technology, in terms of human resource. They will develop and educate us. They will share their experience for us. So I understand the timing issue. There are more priorities, but also there is. I believe there is also some possibilities.
Can I follow? Just quickly follow up.
Sure, sure.
But you probably know about that. With regard to the European Union, we are not yet having a capital market union in the European Union, even though the European Union and the freedom of service was founded in 1958. So we are still working on that, even within the European Union as being so highly integrated. And I think it's important to differentiate between liberalizing your own domestic market on what you just said, that is to say, to allow foreign investors, banks, whatever, within your domestic capital market, under your domestic rules, prudential rules, and supervisory authority, and on the one side and on the other side to have really a single, harmonized, with one set of rule, totally liberalized, transnational, whatever market, under the AFCFTA or other regional integration agreements. They are separate. The second one is really a big, it's a big thing to do. Liberalizing domestic markets is important, necessary, and I think today we saw a lot of promising steps in this regard.
Thank you, Professor. You want?
Give it to Dr. Castro. Okay. Thank you, Kate, for asking the very interesting question. In fact, just I should have put a disclaimer at the beginning of the presentation that we didn't, just touch upon the aspect of the dispute resolution system of the capital market. Look, capital market disputes in Ethiopia are divided into two: administrative disputes and civil disputes. For administrative disputes, the law has clearly provided that there is a capital market tribunal, as provided under Article 64 of the proclamation. One is, for instance, aggrieved by the administrative decision of the authority, one cannot take that dispute to mediation or arbitration or to court. Rather, one is, just required, and at the same time, just empowered to take that dispute to the tribunal. After the tribunal, to the appellate court, federal court, right, as provided in the proclamation. But cases which are to be resolved by mediation and arbitration are civil disputes. The law says civil disputes. Still, what are civil disputes? This is still a question, but we understand from common sense that civil disputes are quite different from administrative disputes, right? Disputes which do not have anything to do with decisions made by the authority in its just administrative capacity.
Thank you. Thank you very much. I think with this, I have to come to the conclusion of the part of this afternoon session.